This is not your classic realtor video telling you to buy a home now because rates are only going to remain high for so long. And if you don't buy now, you're just screwed. I've heard this mantra now for 3 years. And what we really need, more than anything in this industry, is an honest assessment. Is it the right time to buy a house? Is it the right time to sell a house? Is our market going to crash? That's what we're going to talk about today. A lot of buyers aren't buying right now because of the fear that there could be a market crash. I'm not going to lie to you. It's a weird time right now, and I'm not going to make any political statements, but what we do know is tariffs are happening, the stock market has been dropping, and the question is, will home prices follow? So one way that we analyze that in real estate is we look at the median price. And the median price in the month of April in the Denver metro went down 0.17%. Previous month, it went up just a little bit. So the median price in the Denver metro right now is $599,000. And the question is, are there the right ingredients to drastically reduce prices? Historically, with the exception of 2008, recessions don't drastically reduce prices. They generally moderately reduce prices in a way that's almost unrecognizable. With the exception of 2008, which was a housing-based recession due to bad loans and the mortgage-backed security falling apart. I'm not going to get too deep into that. A lot of economists right now are predicting, because of the tariffs, that we could go into a recession. So, is it right to buy during a recession? Well, if you would have bought in 2008 and held until 2012 and then sold, it could have been one of the best investments you've ever made. The good thing about right now is there are less buyers that think it's the right time to buy, i.e. it's a buyer's market. And if you ask ChatGPT, should I buy a house in a buyer's market or a seller's market? Do you know what it's going to say? You know what ChatGPT says? ChatGPT says there are a myriad of factors and it depends on your own personal circumstances, which is absolutely true. In other words, there's no perfect market to buy a house in. But there are pros and there are cons to the market that we buy a house in. So what are the cons of buying a house in a buyer's market? Well, it may be a signal that economic conditions are shifting. So if you think that, we could be going into a recession and there could be layoffs and your job could be impacted, I wouldn't buy a house right now. If you feel very job secure, this could be a right time to buy a house. So if the economic conditions are not going to impact you in such a negative way, in other words, if you're going to have to pay for rent anyways, and you can afford to take the risk of buying in a buyer's market and a potential recessionary environment, what are the pros? Well, ChatGPT answers that too. It says you've got leverage. That's absolutely true. Because on offers that we're putting in right now, they're oftentimes below list. You oftentimes can ask for concessions, which is money that can cover your closing cost, or you can ask the seller to buy your interest rate down to make your monthly payment more affordable. We're seeing all of this happen on, honestly, most deals that I put under contract, both for buyers, and I'm telling everyone that's selling right now to expect these things when we go to market. This is a wildly different picture than it was during the pandemic, where there were multiple offers on properties, as is inspections, no appraisals, high down payments, cash offers, you name it, you were up against it. Combine that with, there was like no inventory. I had home searches set up for people, And oftentimes there would be like 3 to 5 homes come on the market that fit people's criteria. And those 3 to 5 homes would all have multiple offers, and they would all go under contract in that first week. Now I can make a home search for people, and we have a healthy amount of options. Oftentimes we can go and look at homes and not feel pressured to make a decision within minutes, or that house is gobbled up by the highest bidder. So in other words, you can actually make a reasonable and logical assessment of the house that you looked at. Look at your payment, figure out how many concessions you need to make that something that's affordable. And after you've done all of that thinking, then you can buy a house. What I noticed with a lot of buyers during the low interest rate pandemic period was they would wake up the next morning and be like, what did we just do? We just bid $75,000 over on a house and we don't even get an inspection on it. That's not happening as much anymore unless it's a very aggressively priced home. It does happen occasionally, but not very often. It's definitely more common, the scenario that I'm talking about, to go below list, to get concessions, to see days on market properties, etc. So if you can afford a home right now, it could be a good time to lock a good price on that home because you have negotiating power. So are we in a buyer's market right now? I would say absolutely. Given that buyers generally have more power than sellers in a property or in a listing that has survived beyond one weekend. And here in Denver, really 26% of properties are selling in the first 2 weeks. So that means that 3/4 of our market right now is there and just wanting you to get a deal on it if you can. So not the right market for everybody. What's the other risk of a buyer's market? Well, appreciation not happening. That's a big risk. We could go into a recession, prices could flatline. Some people think prices could go down a little bit. Most economists agree that we don't have the right ingredients for a drastic price reduction. Although there could be some pros to that, most people don't see that as likely to happen because there's not enough supply and there's still enough demand. The builders haven't built enough. Most people don't want to sell because they're in a super low interest rate. The list goes on and on and on and on that has prevented the market from gathering enough inventory to make a huge dent in prices. But prices could not go up as fast as they have traditionally. So I believe the National Association of Realtors is predicting that prices are going to go up 6% next year. I am not that optimistic. Generally, the conversation that I have with people is if you buy a house, be prepared, especially right now, be prepared to live there for 3 to 5 years in order to gain enough equity to make selling make sense. So in other words, if your life is transient, if you could get a job transfer, if you could have any large material change happen in your life, it probably doesn't make sense to buy a house right now. However, if those things don't apply to you and you want more inventory and you want more negotiating power and you can afford the monthly payment with the higher interest rates, then this could be an amazing time to buy a house for you. So take the inverse. Seller's market, there's not very many homes, there's low interest rates, and that's what I hear most of the time is, hey Derek, I am waiting for interest rates to go down. US News and World Report says 80% of people are waiting for rates to go down, preferably below 5% to buy, and 76% waited last year, which is a lot of pent-up demand. We have no idea when that's going to be. However, data shows that if we enter into a recession, interest rates are going to go down. Right now, the stock market is plummeting. You know what else is going down at the same time? Interest rates. The worse the economy does, the better interest rates get. And then as interest rates improve, people whose life has not been impacted in a large enough way, they will come to the table to buy a property, which means increased demand and decreased supply because more people are buying homes. It was kind of a sweet spot to buy a house if you can, and that's when demand's not too high. Supply is also not too high to create a price drop. So you're kind of looking for that middle ground. There's enough demand, but not too much of it. There's enough supply to give you some options, but not so much of it that it's going to decrease a whole metro area's value. Here in Denver, we have more supply. We have over double the supply that we had during the recession, but that was historic level low supply. We don't have nearly the supply in the Denver area. So in my opinion, we're in this middle ground right now, this equilibrium for a buyer where you've got just enough supply to have options, to not settle, to have negotiating power, but not so much supply that we'll see drastic reduction in prices. And on the other side of it, we have just enough demand where people are still buying homes, people are still selling homes, there's still a need for that. There's been an uptick this spring, but there's not so much demand that it's terrifying to go out and get a house, and you're not gonna lose 35 offers before you get that house. You're also not gonna have to settle on a house that doesn't check all of the boxes for you, unless some of those boxes are beyond your budget. But what I found in a lot of cases in a seller's market is buyers are settling. They're beaten up. They've lost 6 or 7 offers already, and they're like, I guess this one's good enough. We just need to get a house. Right now, we've got inventory, we can look at it, we can find a house that you really like, that is a home that checks as many boxes as possible given your economic situation. Historically, real estate is a safe thing to be holding in a time period of recession. It didn't drop 5% like the stock market did just yesterday in one day. The real estate market takes time to go down, and that's if it's going to go down. And in most cases, during a recession, it doesn't go down much, if at all. So assets are generally a pretty safe holding for you in a time period that's a recession. So if you feel like all of these requirements and all of these criteria match up with what you are thinking and what your goals are, and you're renting a property, or maybe you're living in a house and you're scared to sell it, there's no perfect market. There's absolutely no perfect market. Seller's market, buyer's market, market in equilibrium, there's none. But hopefully by watching this video, you've learned the pros and the cons of this market, and you can make a better assessment of, is this a market that I want to buy in? If it is, I'm here. If you want to talk more in detail and have a detailed market analysis with me, I'm here. If you want to call me and tell me that I'm an idiot and that home prices are going to go down, I'm willing to have that conversation. I'm willing to analyze the data, and I'm willing to try to see things from that perspective. However, as of right now, based off the data that I've analyzed, I think this is an incredible time to buy a house if you can afford it, if a recession isn't going to impact you financially in a large enough way that makes it to where you can't afford a housing payment, and if you want to have more power in a market, more say-so than a seller.